Hi guys, how are you doing? This is Shade Tinashe, and today we are going to be analyzing BOM 600 from the derivative markets. So we're going to do analysis, then after analysis we're going to do a little bit of market psychology so that you know how the market acts, how the market works, stuff like that. So like we always say, it's either the market is in a downtrend which looks something like this and keeps going down, creating lower lows as it goes down, or the market is in an uptrend, creating higher highs and higher lows as it goes up. So in this case, you can see that the market is in a downtrend. So we already know that this is our target. So there's an uptrend, there's a downtrend. Then we have corrections. So corrections is when the market doesn't have a side to go. It's working on getting a side like here. You can see that this is a correction. Market was ranging in between this zone. It was going up and down. And you put it here. You enter the top, you scalp and exit at the bottom, but I would encourage people to enter these movements. But other people trade corrections. This is also in correction, but it's a bit to the upper trend side. Okay, so based on what we have, we want to look for a trade, want to look for an entry. The first thing we do, like always, is to grab our parallel channel. Touch the first two highs, that high and that high. We touch the lowest point, we have that point. Now we know that the market is in a downtrend. Now we know that the market has to come down. But with this only, we can now move on to the 30-minute time frame. Okay? We now have a clear and better vision of the 30-minute time frame. So looking at this, we don't have a perfect entry. If the market is where it is, we can't be sure when is the perfect time to execute a trade. So what I would suggest doing is taking your Fibonacci retracement, touching the previous high and touching the lowest low, which is right here. So guys, what you're waiting for is waiting for the market to reach 50% retracement so that we look into selling. So this is what I mean. This is what you call the premium and discount roll. This is our 50% right here. Let me go ahead and delete this. Go ahead and delete this as well. So this is our 50% from this to this. So we have premium, we have discount. So if this is selling, if we are looking for sales, we obviously don't want to sell when it's in the premium zone. This is the premium zone. Sorry. We obviously don't want to sell when it's in the discount zone. And we want to buy when it's in the discount zone and sell when it's in the premium zone. So this is what I mean. When you are buying stuff, of course you want to buy in the discount zone. You want to buy when whatever you're buying is cheap. No one wants to buy when it's expensive. So people tend to buy stuff in the discount zone. No one wants to buy when it's expensive. Same applies when it comes to selling. No one wants to sell their stuff for a discount. Everyone wants to sell their stuff for a profit. They want to sell it for a premium price. So the premium price is above 50%. Anything in a sell that comes after 50% is a premium price if we are selling. If you are buying, anything that is lower than 50 is a discount. Sorry, if you are selling anything that is lower than 50 is a discount. You wouldn't want to sell anything you have for less money. So based on this premium and premium discount theory, we now know that we are waiting for the market to reach 50%. If it reaches 50%, we know that's when our entries are. But just based on that, we don't have the perfect entry. We just know that the market is now in a selling zone. So we indicate this as a selling zone. This is not a selling zone. This is a selling zone. So we now look for confirmations. My favorite confirmation is taking the trend line. Look for two lows. You can see we have a low, we have another low that were broken. Okay, this low and this low, these were broken right here, and then it went down. So I would take this as a retracement. I would take this as a retest. So the market went, did its stuff, and now it's back and it's retested. And at the same moment it tested, it gave me another confirmation, which is entering our premium zone. So this just gives me a perfect trade. And now I know perfectly that the market is now in my premium zone, and I can now sell it. So based on this, I now have a trade, a good trade. What I will do is I will insert my short position from here. My stop loss would be right above this strong support, so I will place it somewhere here. That's my stop loss. Then TP. Our TP is on the 1 hour time frame. Move back to the 1 hour time frame. Okay. We are now on the 1 hour time frame. We take back our parallel channel. We place it like we placed it before. 1, 2. And at the bottom, 1, 2. Okay, meaning our market has to fall down and touch this zone. So meaning I would put my take profit right here. This has a 2.5 risk to reward ratio, 2.4, 2.5 risk to reward ratio, which is very, very good. If you risk $100, you make 240, you make 250. It's not bad, it's a good trade. So this would be a perfect entry. I will send that now to all my groups so that people can enter. So yeah, that's it. See you guys at TV. Let's go. Don't forget to like and subscribe.